if you guys, one of you want to start sharing your screen.
Yeah, this is Randy. I'm going to share my screen here. Make sure everybody can see it. How are we doing there? All right, can everybody hear me okay? One person responding would be fine. Thank you. All right, well, thank you, Jenna and team.
819.
If everybody can mute in the meantime, that would be great. Thank you. You know, as Jenna said, we're Team Alaska USA Federal Credit Union. My name is Randy. I'll be presenting today. We have Danielle on the phone. She's going to be managing the chat function. So when you are ready, if you have questions or anything, you'll feel free to chat those through. We're short on time and we're going to try to power through this. So if you can hold any verbal questions till the end, that would be great. But also you can send those questions through the chat function and Danielle will compile them and we can also answer those. For any questions we don't get to in the end, we'll make sure that we get those answers through Washington Business Week team there and then we'll get those answered for you. Casey is also on the phone and she's going to be running the quiz show questions as we go through. So we have kind of an interactive quiz show presentation featuring important aspects of how to manage your money, how to save it, and how to spend it wisely. So after each topic has been discussed, we'll have kind of a quiz show round. For each round of our show, we'll display the name of one individual from each of the 11 companies. The 11 participants will be asked a series of questions, and the first to chat their company name for each question, for instance, just chat A, G, etc., will be called on to answer the question. If you're called on, unmute and answer the question. If you're correct, your company will receive a point. You won't know when it is your turn until the slide is displayed, so be sure to take notes and be ready when it's your turn to shine. Once again, the first company name we see displayed in chat will be the only team with an opportunity to answer. Answers will be tallied and a winning company will be chosen. With that being said, let's start with round one of the Guide to Money quiz show. So the first round we start with is smart saving and spending. So in order to get a true picture of how you spend your money, you'll need to start tracking your spending. This may include keeping a log and monitoring your spending habits. Think about your spending habits. Do you spend money as fast as you get it? Do you think before you spend your money? Do you divide your money into spending and saving and giving? Next, make a list of your income. Write all the way you currently receive income and the amounts you receive. Then you'll want to evaluate every area of your life that will affect your finances. For example, some of you may have a car. Sorry about that. Sorry, I clicked the screen by accident and had to go back. Those of you that do have a car, you know there are lots of additional costs associated with vehicle ownership. Aside from the cost of vehicle, you have gas money, repairs, insurance, just to name a few. So now that you have a clear picture of your spending habits, income, and current financial situation, you are ready to start creating a financial plan. This will include creating a savings and a spending plan. List all of your known monthly fixed expenses, meaning the amount that will stay the same from month to month. This should include your savings. Next, list out variable expenses, meaning the amount that can vary or change each month. For example, a car payment is a fixed expense, but gas and electricity bills are variable expenses. Finally, you're ready to put your plan into action. Now you've pulled all your information together and written it down, but it will only work if you use it and stick to it. Your financial needs can change, so be sure to keep your plan up to date. Through this section, we've been calling this your financial plan, but really all it is that dreaded B word, a budget. Being brutally realistic about your financial situation is a vital part of succeeding with money. To quote Seahawks quarterback Russell Wilson, the separation is in the preparation. Preparing a budget or a plan for your savings and spending is a must.
To musicie, bo tutaj nie ma czasu.
So what you see here is an example of your financial plan or budget. On the left, we have total income to be calculated. Then on the right is a list of all our fixed or variable expenses. There is a line for the difference or the remaining amount of money that doesn't have a specific purpose. This is a great opportunity for you to determine where the difference goes. Will you save it? Will you invest it? Share it? Or even spend it? So now we have some questions for you. Round one will be group one. So if you see your name on the list there, once Casey reads your questions, you'll be able to chat the company letter if you have an answer to the question. So I'll turn it over to Casey.
All right, thank you, Randy, and good morning, everyone. So again, please look at the screen. If you see your name on there, then you are up for this round of questions. So make sure that you have your chat pulled up, and when you are ready to answer, go ahead and chat in your company letter. So the first question today is to define a budget. All right, it looks like Group D. You're the first one to respond. Looks like Allison. Do you want to answer the question, define a budget?
Allison, you may be muted.
Yep, you'll want to unmute yourself.
Let's go ahead and go to company G instead. They actually answered. I believe that Allison may have been responding to a specific person, not just everyone.
Okay.
So, okay, we'll go on to question number 2, and I will score for Team G.
So it looks like Team G got the answer of what is a budget, estimate of income, and how much you spend. All right, so question 2 is your car payment or rent is an example of what type of expense. Looks like Group E was the first to respond.
Fixed.
I'm sorry?
Fixed.
Correct, yes, fixed expense, so great job. All right, and now question 3. Name 2 examples of a variable expense. Looks like C, is that correct? Was the first one in?
Ja jestem z naszej grupy, ja nie ogarnę do końca. Wiem, ale jakby nie bardzo.
Group C, are you out there?
Nieprzewidywalne.
Yeah, sorry. Credit card fees and commissions.
Yep, that can definitely be examples of variable expenses. Great job. All right, so your scores have been added, and then we'll be back in a few minutes for another round of questions. So I'll hand it back to Randy.
Thank you, everyone. Good job. Now let's talk a little bit about savings. Our first option mentioned would be to save it. That's what you can do with, the first money that you have, as long as you pay yourself. So most financial institutions offer a variety of savings account options. However, the requirements or guidelines for a particular savings account can vary greatly from institution to institution. A couple of things to consider are what options they have for savings, what are fees or costs associated with doing business with them, what additional services do they offer that suit your current and future financial needs. Before you chose a savings account, you should consider your short-term and long-term financial goals. A short-term goal might be to save $500 for emergencies or a weekend trip. A long-term goal might be to retire at age 50 or buy a boat in 10 years. Beyond basic savings accounts, most credit unions or banks offer money market accounts. Money market accounts usually pay higher dividends or interest than your basic savings account. However, money market accounts typically require a larger minimum balance in order to avoid a monthly service fee. Another savings option is a certificate of deposit, or a CD for short. A CD typically earns higher dividends. However, in order to earn the higher interest rate, you agree to leave the money in an account for a specified amount of time. And if you do withdraw the funds before the date, you incur an early withdrawal penalty for breaking the agreement or terms. In a moment, we'll review a few ways you can achieve your goals and establish an easy way to pay yourself first. But first, let's check in with what we've learned. Ready, group? Ready, group 2 for round 2 questions. We're calling on the following individuals. Casey, you're up.
All right, so if you could take a look at the screen and see if you are up for this round. Give you a moment to see that. Make sure you have your chat up. All right, so next question for round 2. Why is it important to shop around before you open a savings account?
Znowu będzie cisza. 3 razy powie do nas hi i
Let's see, G. Group G.
To make sure that you're getting the best deal for your situation.
Yep, definitely, to make sure you get that research done, check out fees, anything else that might pertain to you. Definitely. Good job. All right, next question. What type of savings account would guarantee a return but requires you to keep the money on deposit for a certain length of time? All right, group G.
Was it a CD account?
Correct, a CD or a certificate of deposit. Good job. All right, and third question for this round is to define a money market. Not seeing anyone chatted in yet. Any groups out there want to answer this question? All right, group F.
Sorry, that was a typo. I meant to type D.
Okay, yep, then group D.
So it's just a short-term investment.
A money market? It could be considered a short-term investment. I'm sorry?
And mutual funds.
So it's not necessarily invested in the market. It still is an account. Let's see, does group E maybe want to try to take that one?
It's an account that pays interest based on current interest rates in the money markets.
Yep, so it's going to pay a little bit higher return than a savings account. Yep, good job. All right, those are our round 2 questions. Thank you, everyone.
All right, everyone. Now let's look at how to pay yourself first. Paying yourself first is a principle for successful saving. Savings should always be a priority for your finances. Think of pay yourself first as a bill you owe to yourself. By applying this principle, you'll always be setting aside money each month towards your savings goals. If you have a job that offers direct deposit of your paycheck into your account, you can have your savings automatically transferred, or you can have a savings amount automatically transferred from your pay and deposited into your savings account. Or you can establish a direct transfer with your bank so a set amount is deposited to your savings on an automatic basis. Also, you should increase the amount you save as your income increases. Most consumers increase their spending when their income rises, but don't consider increasing the amount of their savings. Keep the amount at a level you can stick with. Be realistic. While savings is important, you need to be sure you have enough to pay your monthly expenses as well as having some money for some extra fun as well. After all, you work hard for your money. You should enjoy it too. All right, let's check in with what we've learned there. Ready, group? Round 3. We're calling on the following individuals.
All right, so group 3, round 3 questions. First one is, what should always be a priority with your finances? Or I'm sorry, what should always be a priority when creating a budget? Looks like, was that group D?
Accounting for your monthly expenses.
Definitely accounting for your monthly expenses. And what specifically are you wanting to account for?
Things like rent and bills.
Yep, we want to do that in there.
Or necessities.
The necessities. Yep, we also want to make sure that we are saving money. But I'll go ahead and give that to you because that's very important as well. All right, the next question is to describe the concept of PYF. Or pay yourself first. Can you describe the concept of that? Group A?
First is that you want to put money into savings, like so that you have money for other things in your budget.
Yep, definitely. You want to put some money in savings first. Think of yourself as a bill. Pay yourself first. Figure out how much you can pay yourself each month. Yep, definitely. Good job. All right, and question 3 is to provide 2 examples of a long-term financial goal. So looking for 2 examples here. D?
One could be like retirement. That's a long-term goal. Or buying a huge house or something like that.
Yep, definitely. So retirement and buying a house are good examples of long-term financial goals. Great job. Thank you, everyone.
All right, now let's discuss what we call smart checking. Smart checking is a checking account, but it's how you manage it that makes it smart. So some of you may already have a checking account. Checking accounts are usually designed to give you easier access to your funds in order to manage your day-to-day financial needs. One of the most important aspects of having a checking account is to keep track of your spending very closely and maintaining accurate records, whether you utilize your checking with paper checks, cash, ATM, or debit cards. Keeping accurate records is important because the cost of bouncing a check can make a significant dent in your financial plan and budget. Bouncing a check means you wrote a check or used your debit card and the funds were not available in your account. When this happens, there's a non-sufficient funds fee or NSF fee added to the cost of your transaction. The average NSF fee ranges from $25 to $34. Aside from the fee, you may also risk having your account closed, experience a difficult time opening future accounts, and being charged a higher interest rate when you apply for a loan. Although ATM and debit cards are useful and convenient tools in accessing your funds, if used irresponsibly, they can cause problems. An ATM card allows access through an automated teller machine or ATM through use of a PIN. A debit card can also be used in an ATM with a PIN, but is more commonly used at merchants for direct purchases deducted from your checking account. Please be certain that balances you obtain from an ATM or online is always verified with your records. Many times the available balance does not reflect all of your debit transactions or check withdrawals you've made. There can be a time delay for a transaction to post, and this can cause your account to be overdrawn. When this happens, there is usually that nasty NSF fee. Online access is a great way to monitor your account. However, as a reminder, some transactions may not have been posted to your account yet. Online information should always be compared to the records that you keep for your account. Monitoring your account is always important to recognize fraud that might occur. Protecting your financial information is extremely important. Establishing a strong password, creating security questions, changing your password from time to time, not sharing your password with anyone, social security number or account numbers also with anyone are all steps you can take to help avoid someone gaining access to your account. Shredding personal financial information and signing up for e-statements are also great tools for protecting your information. All right, team, ready for round 4? We're calling on the following individuals.
I had a question.
Yeah, go ahead.
Oh, I've heard sometimes that there can be a fee for using an ATM. Is that true? And does that like depend, I guess?
Yep, there can be fees for using ATMs, especially if it's not your financial institution's ATM. So it would tell you that at the ATM what the fee would be. And then you would also have to check with your financial institution to see if they charge a fee, because there can be a fee on both sides or sometimes only on one side. So it really depends on the ATM that you're using and your financial institution.
Okay, thank you.
Yep, you're welcome. Good question. All right, so heading into round 4 questions. So if you see your name on the screen, then these are the questions for you. Please chat in your company letter if you are ready to answer. All right, so first question. What does it mean to bounce a check? Let's see. Oh, I got a lot of different ones. Looks like group D.
It means that there's not enough money on the account.
Correct. Yep, it means that you wrote a check, but you didn't have enough money in your account to cover that check. Yep, good job. All right, question 2. Why is it important to track your available balance and keep good records? Oh, you guys are getting faster at chatting these in. All right, give me a moment. Let's see. Group C looks like was the first one. Group C, you might be on mute.
So that it doesn't get mixed up, and so that you always like know how much you have, and so there's no mistakes.
Yep, so that you always know how much you have, because sometimes things haven't cleared yet or gone through your account. Your available balance could be different than what your actual balance is. So yep, to make sure that everything's accurate. Good job. All right, and question 3. What does NSF stand for, and what is the average NSF fee? Looks like group C, I think was the first one. Group C. You might still be on mute. Group C, are you out there?
Or we can go ahead to the next one I see with company G, if G would like to answer.
Okay.
Would it stand for non-sufficient fee? And it would range from 25 to...
I think you cut off at the very end. You said 25 to how much? I don't know if you got put back on mute or something there.
Can you hear me now?
Yep, I can hear you.
Okay. Does it stand for non-sufficient fee? And the average would be 25 to 45?
Very, very close. Danielle, do you see who was the next group who could maybe answer that question?
Okay, we'll go ahead and give company G the points because the average is 25 to 34, so she was definitely in line there. So we'll just keep on moving. Good job, everyone.
All right, sounds good. We'll hand it back to Randy.
All right, team. Now, excuse me. Now we'll start to talk about how to borrow very quickly. We want to discuss the importance of credit. Having a foundational knowledge of credit and credit reporting can assist you in a strategy we call smart borrowing. You know, we had smart checking before. Now we want to talk about borrowing smartly. So first, you really want to understand your credit report. Your credit report is a financial history that lenders use in order to determine what risk level you are in paying back a loan. Understanding your credit report is the first step in smart borrowing. Your credit report contains information such as the amount of money you owe, if you have auto and credit card debt, how promptly you pay your bills, and where you live and work. Credit bureaus start collecting information about you when you reach the age of 18, and they use the information to calculate a 3-digit credit score for you. Your score can determine whether or not you are approved for a loan and what interest rate that you might be charged. An excellent credit score ranges from 720 to 850, and your payment history makes up the largest portion, or 35% of your total credit score. There are basically two types of credit: unsecured and secured. Secured is tied to the collateral on a loan. Collateral, for example, would be an auto or a home loan. The loan is secured by the vehicle, and the vehicle can be taken back if you don't repay the loan. Unsecured credit is not tied to any collateral. An example of an unsecured loan is what we call a signature loan or a signature line of credit. Your signature indicates you'll pay the loan back with interest. Unsecured loans tend to have a higher interest rate due to the higher risk involved for the lender. The cost of credit simply means the amount of the loan plus interest broken down to a payment summary and schedule. For example, you have a credit card with a $5,000 balance at a 13.5% interest rate. Let's assume you make a minimum payment of $150 every month. If you only make this minimum payment and don't use your card again, it will take you 3.5 years to pay off the balance. More importantly, you would have paid more than $1,300 in interest. In conclusion, the cost of that $5,000 loan was approximately $6,300. So borrowing money comes at a cost. Always consider all of your options before you borrow. For example, is this purchase necessary or can it wait? If so, could you save for it rather than borrow the money, or save a portion so you don't have to borrow quite as much? All right, team, you ready for round 5? Let's call on those individuals.
All right, group 5 or round 5. First question. At what age does a credit bureau begin collecting information about you? First group to chat in. Looks like group G.
18.
Correct, good job. All right, next question. Your payment history is important and makes up approximately what percentage of your credit score? Group G?
35%.
Yes, good job. And question 3, give 3 examples of a secured loan. If you can't come up with 3, I'll take 2. Group F.
Do you mean like things that can be secured with a secured loan, or like different names for a secured loan?
Either one, something that can be as.
So for a secured loan, you can have collateral on your house or maybe like a car.
Yep.
Yeah.
Yep, definitely a house loan, mortgage, or a car loan. Good job. All right, Randy, back to you.
All right, team, we're in the home stretch, so we're going to power through the rest of the way here. So to wrap up our presentation, we want to review several items that are often overlooked until we're older, yet are critical for financial planning. Insurance is something you consider sooner rather than later. Whether it is car insurance, renter's insurance, health insurance, or life insurance, budgeting for insurance when you are younger can be a huge cost savings. Most people choose an insurance company based on the one someone else in their family is using. However, it may not be the best value for you. There are numerous insurance options, and shopping around can save you money and provide better protection. Be cautious though, and avoid signing up for anything you don't fully understand. Most people invest for 2 reasons: income or growth. Income investments pay you interest and add to your income. Income investments generally are less risky than growth investments and are typically shorter term investments. The interest earned on your money is also typically less than growth investments. A CD or a US savings bond are examples of an income investment. Growth investments, on the other hand, offer higher potential returns on your money over a longer time frame. There is a higher risk and typically come without a guarantee. However, if you're comfortable with the risk, there is potential for larger growth on your investment. Examples of growth investments are stocks and mutual funds. When you purchase shares of a stock, you become part owner of a company, and hopefully the company will do well and your investment will grow in value. When considering investments, it is important to know that it pays to start early. When your interest earnings have time to compound year over year, you earn money. Let's take a look at this investment chart and the effect of the compounding interest and investing early. The numbers along the bottom of the chart are the age of the investor. If a person at age 25 invested $2,000 a year in a mutual fund that averaged a 10% annual return, the person would have $885,000 at the age of 65. Whereas if the person waited until just age 30 to invest, the amount would be only $329,000 at age 65. That's over $500,000 difference. Imagine how much you could earn if you started at age 18, 19, or 20, or increase the amount invested by even $1,000 a year. Diversification is also an important consideration for investing. Having all of your eggs in one basket can pose a greater risk than choosing a mix of income and growth investments. Always consider the amount of risk you are comfortable with when you are investing. Okay, team, ready for round 6? We're going to call on the following individuals.
All right, round 6. Take a look, see if your name's up there. All right, question 1. How do most consumers choose an insurance company? Group D, it looks like.
Name brand. What's closest?
That could definitely be. They've heard about it maybe from, they know about it because of people around them in their circle, and that's how they have that name recognition. Yep. All right, question 2. List 3 ways to financially invest in your future. 3 ways to financially invest in your future. Or I'll take 2 if you can only come up with 2. Let's see, it looks like group F.
Mutual funds,
yep.
Saving by yourself, and stocks.
Yep, stocks, bonds, and mutual funds would be the 3, so good job. All right, and third question, name 3 different types of insurance products. All right, looks like group E.
Yes. Okay, 3 different kinds of insurance products. That depends on the industry. If you're going with health, you can have whole life, term. Other insurance products could be liability for automotive aspects.
Yep, so you're talking about life, auto, home, renters. Yep, exactly. Job. All right, Randy, back to you.
All right, everyone, we're going to go through a couple of lightning rounds here of true false questions as we end. Now that you've learned the important aspects of how to manage money, we're going to wrap up the quiz show, and we're going to have two last groups answer 6 total, 3 per group, true false questions. So Casey, let's go through the truth about millionaires.
Yep, go through this lightning round here. So see if your name's on the screen and chat it in. And these might be quick, so Danielle, I might need a little bit of assistance seeing if they're typing in quickly. So first question, true or false? Most millionaires inherited their money. Okay, group E.
False.
Correct. False. Only 19% of millionaires were given any money or wealth from their family. All right, next question, true or false? Most millionaires make their money in glamorous ways like sports stars, celebrities, musicians. All right, looks like
I saw D.
D? Okay, group D, thank you.
False.
False, you are correct. Most millionaires work in very ordinary jobs, but they've built their business and they accumulate their wealth over time. All right, third question for this group, true or false? Millionaires have lots of credit cards. Okay,
That is H.
Yep, group H.
False.
False, correct. Most don't use credit cards, but if they do, statistically, they keep just one, and most of them pay it off in full each month to avoid paying interest or accumulating debt. All right, next or last group, I believe. See if your name's on the screen. All right, first question for this group. Most, true or false, most millionaires own their own business. Okay, group E.
False. Or I'm sorry, I meant true. Yes, they do. Sorry.
Yes, correct, true. Most millionaires consider themselves to be entrepreneurs. They usually work more hours than an average person and are the decision makers for their companies. All right, next question, true or false? Most millionaires are college graduates. All right, looks like D.
True.
True, correct. 4 out of 5 millionaires are college graduates. They are well educated. All right, last question, true or false? There is a good possibility that you can be a millionaire. All right, let's see. Danielle, did you see the first one?
I saw D as well. They really want a chance here.
All right, group D.
True.
True. Yep, it is not that hard if you stick to a savings plan. All right. Thank you everyone for those questions, and Danielle will get them added up here shortly to let you know who the winner was. Randy, I'll pass it back to you in the meantime.
All right, everyone. While they're tallying the scores, we just want to thank you for inviting us to Washington Business Week. We, of course, thank you for your time and everyone for your attention today. You were all such good participants. We wish you all the success you can have in the future. We really hope this information was helpful. I know it was fast, but hopefully you can pick out at least a few good things that'll help you develop really good financial habits. If you need financial services or information, you can always count on us here at Alaska USA. We'd love to help. So we want to announce the winner now. Danielle, do you have the winners?
I do. It was all because of that last true and false round on the truth of millionaires. And the winner is Company D. Congratulations. We will coordinate with Washington Business Week. We do have some prizes that we'll make sure to send your way.
All right, and as we suspected, we're pretty much out of time. So hopefully Danielle has gotten all of your questions, and if you have further questions, please feel free to continue submitting those through the Washington Business Week team, and they'll get them to us, and we can get them all answered for you. So thank you so much.
Yes, thank you. And Washington Business Week team also has our contact information. So if you do have any questions, feel free to ask for our emails, and we'd be happy to discuss anything with you after you're done with your week.
All right, bye everyone.
Have fun, everyone. Bye.
All right, thank you guys so much. Thank you to Alaska USA for supporting Washington Business Week and coming and sharing their knowledge here with the students. You guys have a company meeting here. Q7 is due at 10 a.m. So I am pushing you out into your breakout rooms. Have a good morning.
Andrea?
Yes.
Hi, I have a question. I think it's kind of I don't want to be saying anything, but I think it's kind of a disadvantage how some people's videos got put out earlier on YouTube.
Yes, so we did have to stop putting them out at 9 o'clock. So you guys, the people who did submit them early did get out on YouTube.
Okay, and the likes are going to be counted on YouTube, right?
The likes actually count on YouTube, Facebook, and Instagram.
Oh, okay, cool.
Oh yeah, all the platforms have them up. Make sure to push those out to your friends and family and get them to like them on all different platforms.
Great, thank you so much.
Thanks.
Bye.
Actually, it isn't a disadvantage because we had our video put out last, I'm pretty sure, and we have we're in the top. So
Yep.
just send it out to your friends and it'll work.
You guys are killing it.
Could you send me to company K, please?
I am sending you guys to company case. So just so you guys know, if you are left in this breakout room, it means that you did not authenticate, you didn't sign into Zoom. So I'm just working hard. I've got a bunch of you in here. So let me go through this real quick.
Yeah, I'm not in my company.
Yeah, Sam.
Yep, just hold tight and she'll get you switched as soon as she can.
Yo, James.
Yes?
Did you get the video done yesterday?
Yeah, we got the video done yesterday.
Good.